Real estate agents often ask me about the record keeping that's required for when they file their annual tax return. One of the most popular questions is, hey, if I give you my bank statement or if the IRS reviews my credit card statement, isn't that documentation enough to meet IRS requirements? Hi, I'm Jim Flaus. I'm a tax coach and enrolled agent. I work with real estate agents around the country to help them avoid overpaying the IRS. Here's why a bank statement is not enough when it comes to IRS record keeping. If you look at a bank statement, what do you see? Well, I'm looking at one right now. Check number 2,529 was written in the amount of $705.49. Doesn't say who the check was written to. Doesn't tell you whether it was for business or personal use. So no, that's not enough documentation to justify an IRS auditor. Here's another entry, $1,863 to Best Buy. Okay, so if I was an IRS auditor, the first question I would ask is, okay, so what did you buy at Best Buy? You say it was a computer for your business, you say it was a laptop, but how do I know it wasn't a sound bar for your home theater or some other personal purchase? Well, I don't unless I really see the receipt. So no, the bank statement is not going to be enough documentation to really justify claiming it on a tax return. And here's the problem. If you're audited, and so what is the likelihood of an audit? Well, the likelihood of an audit on average is less than 1 out of 100 tax returns, but not for you because you are a Schedule C filer. And if you're successful in real estate, the chances of your being audited by the IRS just doubled. So your audit risk is about double the average taxpayer. On top of that, if your earnings were in excess of $100,000, then your audit risk just doubled again. So thus far we've shown how bank statements themselves are not sufficient record keeping to claim expenses as far as the IRS is concerned. On your tax return, credit card statements are not sufficient as well. One example is a court case several years ago, TC Memo 2000-317, if you really want to look it up. But the tax court in this case ruled against a taxpayer who was a small business owner and actually had claimed gas expenses based on credit card receipts. The taxpayer had actually kept the receipts, kept the credit card statements. However, the taxpayer did not also keep a mileage log. So the IRS disallowed the gas expense because it wasn't sufficient enough evidence to support the fact that it was a business expense. And to take it one step further, the tax court even charged a negligence penalty on the small business owner because the small business owner did not keep an auto log, which the tax court and the IRS prior to the ruling had alleged that was not good enough because they didn't have an auto log, they weren't keeping sufficient records, and in fact, the IRS and the tax court upheld the ruling that there was negligence on the part of the taxpayer because they didn't even keep basic business records to document the events. So they got charged not only the taxes, but a 20% negligence penalty. So this is the point I'm trying to make. The IRS is really serious about record keeping. And there's a lot more going on besides bank statements and credit card statements as for what the IRS is looking for to justify your claiming income or expenses on your tax return. So what are records? Sufficient records is basically any record of event. So that can include, and I'm reading off of an IRS document here, sales slips, paid bills, invoices, receipts, deposit slips, canceled checks. These together with an auto log, meals expenses documenting who you took to a meal, what the business purpose of the meal was for. This all works together for what IRS would consider to be sufficient record keeping to document your business expenses. Hey, I get it. I'm a business owner too. Most business owners hate the record keeping requirements of the IRS. We went into business because we love doing something, like whether it's helping people with their accounting, baking a cake, building a house, whatever it is that motivated you initially, your love for a particular craft or to help people. That's why you went into business. That's what you want to focus on. That's what generates revenue. That's what really gives you fulfillment. The problem is there's also record-keeping requirements in the back end of your business, and if you don't tend to the record-keeping sufficiently, you could be in a world of hurt later. So really, I'm not trying to present a this is what you should do, wag my finger type thing about how you should keep in line with compliance on IRS rules. No, I'm really just trying to keep you out of a world of hurt and a lot of heartache later. If you take sufficient time to seriously do what the IRS is requiring in terms of record keeping, you'll be a lot happier down the road. In fact, you will be in a position where your business will be a going concern. You won't be in a position 2, 3 years, 4 years down the road where you get audited, you didn't really keep sufficient records, you get hit with a big tax bill, and it unfortunately can even take your business down, causing you to lose what you really love, which is your business, your source of livelihood, because you just didn't keep up with the record-keeping requirements of the IRS. There's a lot more that I could say in terms of the details of certain types of expenses. For example, as I've alluded to or even mentioned a few times now already, automobile expense is its own special situation. The IRS has written a whole publication just on how to handle auto and truck expense in your business. I'll do another YouTube video and we'll just focus on auto expense. Another area would be meals. Of course, that used to be called meals and entertainment. Well, they slashed entertainment. That's no longer a deduction. But meals can be deductible. I'll do another YouTube video and we'll just cover all of the ins and outs of how to document and claim meals expense in line with the IRS rules. If you have questions on this or other issues around your accounting or taxes, please get in touch with us. You can get more information at realestatetaxcoach.com, or you can click the link below the YouTube video for more information. Please also subscribe to our YouTube channel and share this video with others that you think will be helped. I hope this was helpful for you. I'm Jim Flaus, Rhymes with House. If we can help you with your taxes, please connect with us. That's it for this time. We'll see you next time.